What's going on, guys? Lee Ryder here, Crypto Didact, and welcome to video number 2 of our basic technical analysis video series. Now, in the last video, we talked about how to read a candlestick bar and the different parts that make up the stick. Well, today we're going to dive into a little bit more detail about what is actually happening inside the candle and how you should be thinking about it when you look at the chart. So, I'll see you in just a second.
Alrighty guys, well welcome to our quick lecture on what is happening within the candle and what makes price move. And I like to think about this as the bull-bear battle. So, what makes price move? And if we think about the market as what it is it's simply just an auction. And so what is an auction? Well, by this definition, auctions are characterized as transactions with a specific set of rules detailing resource allocation according to the participants' bids. They are categorized as games with incomplete information because in the vast majority of auctions, one party will possess information related to the transaction that the other party does not. And that's kind of convoluted, but the important thing is this last bit. The bidders usually know their personal valuation of the item, which is unknown to the other bidders and the seller. So this is very important to understand because this is the whole concept that drives market action. So what makes price move up? So this is going to be a very basic, very dumbed down, but just to understand the concept. This is obviously more complicated because in this demonstration we're going to be dealing with very few market participants, but the general idea, the concept, is what I would like you to understand. So if we look here, we have buyer 1, who is the bid, and we have seller, which is the ask. And when you're trading and you look on your platform, these are the two things you're going to be seeing, the bid and the ask. And that's basically the selling price and the buying price. So right now, the bidder only wants to pay 500 for one Bitcoin, and the seller wants 1,000 for it. So if nothing else happens, this market will not move. It'll trade flat. It'll be flat because there's no participation until one of these guys moves. Well, let's say another participant comes in and he's going to bid 750. Well, this is where greed starts to come in, and this is the first motive of what drives price up, is this aspect of greed. And so buyer 2 is going to bid 750. Well, now buyer 1 is going to be like, well, you know, I really want that Bitcoin, and I think I was just trying to get a good deal at 500. So, but I don't want to lose it, so I'm going to bid more than 750. So we went from a $500 spread to now $250. So buyer 1 then bids 850. He's like, well, I'm not going to let this guy get it. Well, buyer 2's like, well, I was going to pay 750. You know, it's not that far away. So what does he do? He's going to bid $1,000 and he's going to buy that Bitcoin. And that's how the price moves up. And that's how this price can escalate very quickly, because if you think about thousands of participants in a market, this can go very quickly because at the same time these sellers will be raising their prices too in practice. But as this is a simple example, that's how price moves up. Now, how does price move down? Well, in kind of the opposite scenario, we have seller 1 and we have buyer 1 over here, the bid and the ask. And seller 1 wants $2,500 for his Bitcoin, and the buyer is only willing to pay $1,000. Well, let's say a second participant comes into the market and they're like, well, I really want to get rid of this Bitcoin. So instead of $2,500, I only want $2,000. Buyer's still not budging, only 1,000. So the spread drops from 1,500 down to 1,000. And this is where the fear comes in. And this is a fear candle. And we'll look again. Well, now seller 1 is like, well, I really need to get rid of this Bitcoin. I gotta be less than the 2,000, so spread drops again. Now seller 2's like, well, I gotta be less than him, so again we get another another ask where it's lower, and getting a little bit closer to the bid, until finally we get $1,000 ask, and then the bid and the ask are met and we get sold. So this is a visualization of how that looks, because when panic happens, this is exactly what's happening. People are constantly lowering the ask price because the buyers, the bidders they're not budging, they're not raising, and this is how you get down markets. So when we look at a chart like this and we see the movement in these candles, you want to think about it as a battle between the bulls and the bears, between the bidders and the askers. And what you're looking at is the history of the battle. And you can look at these candles and you can see that, like this one right here, how the asks, the bears were they had all this power to drive it down here, and the bulls just didn't have the power to bring it back above this previous high. And so what happens is the market rolls over and you get this area of this is where the bulls and the bears are kind of even, because it's going back and forth. And then you can see they drove all the way down here, no wick, and then all of a sudden the bulls take control. And so what we're looking at is these candlesticks are like little history books about the battle that's going on. So I hope that's helpful. And in our next video, we're going to actually start pulling up some charts and looking at some support and resistance and a little bit more detail about the battlefield. So I hope this was helpful, and we'll see you all in the next video.